Hello, good morning, and welcome to another session of a market breakdown with Legacy Capital, where we start with fundamentals. We look at DXY, we look at gold, we look at GBP USD, and we look at Euro USD. If you are just joining us for the first time, kindly subscribe to our channel, like the video, share, and of course, leave a comment. So this week for our high impact fundamentals, we are expecting that on Tuesday we will have the claimant count change for the Great Britain pound. We are also expecting CPI for the United States dollar for the high impact news. And at 4 p.m. the Bank of England governor will be speaking, which will be affecting the Great Britain pound. And on Wednesday, we'll be having the wage price index that will be affecting the Australian dollar. On Thursday, at 2:30 a.m. West African time, we'll be having employment change and we'll be having unemployment rate. And on Thursday at 7 a.m., we'll be having the gross domestic product for the Great Britain pound. And at 1:30 p.m., we'll be having the core PPI or producer price index, the core retail sales, and of course the producer price index for the United States dollar. We'll also have the retail sales data and unemployment claims. On Friday at 3 p.m., we'll be having the composite index, which is normally called the consumer sentiment for the United States dollar at 3 p.m. From there, let's look at DXY. Buying or DXY have been in an uptrend. We can ascertain that it has been in an uptrend because it has been creating higher highs, lower highs, higher highs, lower highs. It's about creating another higher high, and then maybe it retraces back. So maybe we are expecting to see that on the daily time frame. DXY we're expecting the trend line and creating new higher highs buying. So what we should be looking at with DXY on the daily time frame is maybe to see it buy right up to this level. Maybe it can buy right up to the level of 103.5 before retracing. Overall trend on the daily time frame is a downtrend. We notice that it has been pushing right down, but now we can't ascertain if this is a correction or it is actually buying. But as it has been creating higher highs and lower highs, we actually expect to see it buying and maybe right up to the level of 103.5 with the DXY on the daily time frame. So when we move to the 4 hours time frame with the DXY, what should we be expecting? On the 4 hours time frame, we will notice that it is just from breaking a level that has acted as a measure resistance over a period of time. We notice that the XY has broken this level that has acted as a measure resistance, and it has retested back the zone. So it breaks this level at this point on the 4 hours. It retested the zone and is now buying. So we want to see that the XY buy more to the upside. We can have our first TP. If we are buying the XY, we can have our first TP approximately at this level. We can have our first TP at this level of 100.8 something, and our next TP we can have it at this level. Starting from here, we can have our next TP at this level of 101.2, and obviously we can be expecting our TP get to this level. So this is what we'll be expecting on the 4 hours. But from the 4 hours, we have seen that it has broken the zone that has acted as resistance a good number of times. It acted as a resistance here, 1, 2, 1, 2, 3, and then at the 4th time it break it, so it retested it back. Now we are expecting to see that it buys more. On the 1 hour with the XY, it's clear that it break the resistance. It has tested the resistance, and we see that when they came back to test the resistance, what happened? It rejected it with the wick, telling us that buyer's momentum will continue. So we should be expecting to see that it buys more. And as I earlier stated, on the 4 hours, we should be expecting that our first TP can buy right up to this level of 100.7. So what we should possibly be expecting with it is to see that it pushes to this level first. From this level, it can retrace a bit before breaking the level. So that should be our expectation as the week opens this week with the XY. So from the daily, the 4 hours, and the 1 hour time frame, we can conveniently say that the XY will be bullish this week. From the XY, let's look at the XAU-USD. Let's on to gold. On the daily time frame, we'll notice that the gold has created a double top here. Gold has created a double top here. We have the first top, the second top, and the first top liquidity has already been taken out. So now what should we be expecting? We are expecting to see that gold pushes down and then take out this level. We want to see that gold pushes down and take out this level. If gold, the first thing when the market will open will be that we see that gold leaves from here, drops down, or maybe retrace a bit, gather momentum from the buy candle, then maybe break this zone. Once gold break this zone, automatically within the week we should be expecting to see that it tests this level of 3,000. So if the gold successfully break the level at 3,246, we should be expecting to see it come right down to the level of 3,000. And there is a high probability that we will see that this week because of this double top because of the double top that the market has created here. So the only obstacle now is the level at 33,000. The only obstacle is at the level of 3,240. Once the obstacle is taken, then we should be expecting the market to drop down to 3,000 as far as gold is concerned on the daily time frame. Looking at the 4 hours time frame, let's see if we can see a bit of clarity with the market. Onto the 4 hours, we'll notice that yes, the market actually is in a downtrend from this level. From the second time the market tested the market created the second top, the market has been creating lower lows and creating higher lower highs. So what we should be expecting is to see that from this level the market creates another lower high here, drops down, and of course take this lower low and creates a new lower low on top of the support level that we have on the daily time frame, then retrace from there, then maybe gather momentum, previous support becoming resistance at this level. So we can retrace by the time the market drops down from this level, then creates a new lower low, then it retraces back to this level. If we test this level, we can probably have a scenario like this to push down to break the level, and we will be expecting to get down to the 3,000 level just as we saw on the daily time frame. On the 1 hour time frame, we see that the seller's momentum is already building, and once it builds on the 1 hour time frame, our only expectation is to see that it retraces and take out this level to create us a new lower low. So we are expecting that from here the lower low will fall directly maybe to this level, then retrace back, previous support can become resistance, then maybe drop from there. That's what we are expecting on the 1 hour time frame. So overall, we should be expecting to see more of a bearish move as far as XAU-USD is concerned in the week ahead. From there, we'll look at Great Britain pound, United States dollar. Onto Great Britain pound, United States dollar, we'll notice that the market is creating something like a head, or the market has created something like a head and soldier, and that head and soldier is created on a peculiar zone. It is created on a zone that has first of all acted as a resistance. So we notice that this area has acted as a resistance in the past. This area has acted as a resistance. So when the market went to this level, when the market got to this level, what happened? It created a head and a soldier. You know what that means in trading, or you know what that always symbolizes. You see something like this, then it pushes up, then push down again, then here, trace from here. So you notice that we have something more. We have the first head, we have the first soldier, the second soldier, and of course we have the head. And obviously whenever you see this in trading, it is telling you that sellers are about to set in. Under market structure, is telling you that sellers are about to set in. But one thing that should come to your mind is that after the creation of a head and the soldier, what you want to see is that the market takes out the neck level, the market takes out the neckline. So this week our expectation is to see that the market further pushes down to take out the neckline. When the market take out the neckline, then we understand that there will certainly be a drop in the market, and that drop can possibly, according to the daily time frame, the drop can possibly push right down to the level of 1.27067. So the market can push right down to this level. If to say that the neck level at 1.32376 is broken, the market should push further. So this week on the daily time frame, we are taking an overall bearish bias for the Great Britain pound United States dollar for two to three reasons. The first reason is that the market has created a head and the soldier pattern, which structurally represents the setting in of bearish momentum. Second, that head and soldier is created at a zone that had first of all acted as resistance sometime around September 2024. And the third reason that will give us the overall seller's bias, or the confirmation of the overall seller's bias, is to see that the neckline of the head and soldier is broken. So that's what we are setting out for, to see that okay, we can maybe take the overall bearish momentum as far as Great Britain pound United States dollar is concerned on the daily time frame. And of course, if you look at the candles that has been formed, we will notice that seller's momentum is gradually building up. We have the three dark exposed that has been formed here. If you look at the pattern or the way this candle or this candle closed, the candle of Thursday close, you see that it was obviously a confirmation of sellers in the market. Though we are seeing something like an engulfment here, it could just be a market manipulation. But our major concern or our major confirmation will be to see that this neckline is taken out at market opening. Once it is taken out, then it will be a good sign for us, or a good call for us to take sell positions on the daily time frame. Now let's look at the 4 hours time frame. With the 4 hours time frame, we will notice that the market attempted to break this, but the market did not succeed. So the market could possibly on the 4 hours be retracing back to test this zone. The market could retrace to test this zone, and then maybe possibly retrace from this zone. So by the time the market opens, we can see a slight push to this part and maybe a final drop. And when the market is dropping, our first expectation will be to see the market fall at the level of 1.32341. Then from there now, we want to see that the market maybe retrace and then finally break the zone and move down or keep heading to the daily key level, the daily support that we have highlighted on the daily time frame. So that is what we should watch out for in the week. Then let's look at the 1 hour time frame. Let's look at the 1 hour time frame. At the 1 hour time frame, you will notice that the level we are expecting at the 4 hours time frame actually confirms, or the level had actually acted as a resistance. And at the 1 hour time frame, you will notice that there had been a downtrend line, or there had been a trend line that the market has been there several times. You will notice that the market on the 1 hour time frame, the market has been here 1 time, 2 times, 3 times, 4 times, and this is the 5th time the market is going down or is going to this level. So the market can possibly reject this level and drops down further on the 1 hour time frame. So this is a key level we should look at critically as far as the market opening is concerned. So the market might probably not even get to the level of 1.33411 because of this trend line. The market could just maybe continue retrace right from here, test back this zone, and then maybe retrace a bit to possibly this base and then fall from there. In that case, when market opens, we have to pay keen attention on on the 1 hour time frame. We have to pay keen attention on the 1 hour time frame, because if to say that the market opens and the market breaks this zone, the trend line, what we can be expecting is to wait for the market to retest the trend line, and we buy from there and possibly be expecting the market to get to the level of 1.33800. But if the market fails to break the zone, then we should be expecting to see the bearish momentum continue. So that are our various options. Those are our various options for Great Britain pound, United States dollar for this week. From there, let's look at Euro USD. Onto Euro USD, we will notice that Euro USD is reacting to a daily key level at 1.15153. The market got to this level sometime in February of 10th of February 2022, and the market dropped down. Before the market got to that level, the market had been on the downtrend, and the market dropped drastically from there. So the market successfully pushed back to that level now in April 2025. And before the market pushed at that level, what should we take into consideration? If we are looking keenly, we will notice that the market break a zone that had been consolidating before pushing to that level. So the market break this zone, then push to that level. So what should we be expecting? There can be a possible retracement back into the zone, or this seller's momentum at this level could push the market down. So here we have two options. Either we get the market retesting the zone, or the break and retest strategy, the market testing this and pushing back to this zone to create a double top before selling, or the market falling right down to possibly take out this liquidity and maybe react to this demand zone at a level of 1.07830. So our expectations with the Great Britain pound, with Euro United States dollar, is to see that the market drop down a little bit and maybe clear out, take out some liquidity, test this demand zone, and then we see the kind of candlestick that will be formed when the market gets there before we know if to say that the market will buy back. And there is still another option which is very much open. This market break this the market break the consolidation or the resistance zone, and the market is currently testing it. So there is still a possibility that after testing this zone, the market can push up. Okay, there is that possibility is open. And the second possibility is that since this market is reacting to this level, this daily level that had acted as a resistance, and there was so much sellers pressure from that zone, the market can respect this pattern and definitely keeps on be pushing down and maybe creating lower lows, higher lows, and so on and so forth. We could have a pattern like this, in as much as we could have the market test this zone and buy back to this zone and maybe react to this zone now on the basis of creating a double top. So on Euro USDT, all our options are open. All our options are open on Euro USD. Sorry, all our options are open on Euro USD. Then on to the 4 hours time frame with Euro USD. Moving to the 4 hours time frame with Euro USD, we'll notice that on the 4 hours, after the market got to the daily key level, the market had been creating a series of lower lows. So the market has been in a downtrend, and worthy of note is that the market already took out this level. The market took out this level that acted as support. If you look critically, the market had took out this level that had acted as support. And when the market retraced to test this level, what happened? The 4 hour candle closed as an inverted hammer, telling us that sellers momentum is to set in. So this week we want to see from the 4 hours, we want to see that the sellers momentum further drops down to this level. The market it drops down to this level of 1.11928 and maybe retrace a bit, then maybe test the level of previous support becoming resistance, then drop down from there to keep the sellers momentum going. So that's our expectation. By the time the market maybe pull down, test this level, it retraces to test the level that has acted as support, now becoming resistance. So the market retraced back to test this level, which will now be acting as resistance, and it drops from there. So now on the 4 hours time frame, we are seeing the confirmation with the inverted hammer telling us that okay, the market has to, or the market can possibly sell more. And we are also seeing that from the 4 hours time frame, the market reacting to this daily key level, the market has break the strongest support line, or the support level that the market was basing on to retrace back. So we are not really seeing the possibility of the market retracing on the 4 hours time frame. So we will look more for sell positions on the 4 hours, and I'm sure it's the same thing we'll be seeing on the 1 hour time frame. On the 1 hour time frame, all we want to see is to see that the market pushes out, take out this low, and create a new lower low, then retrace back, test it between this zone or inside this zone. Let me just take it as a zone because we took it. Yeah, the market can retrace inside this zone. Any point from this zone, the market can drop down from there, take out the daily key level, and we'll see more sellers momentum going in. So we are looking at an overall selling bias or bearish bias for Euro USD this week. Good luck as you trade. Make sure you use effective risk management. Don't take many positions more than your capital can contain. Thank you very much.